Welcome everyone. This is Admiral Markets. This is Chris speaking. We're going to take a look at Fibonacci and wave trading in this webinar. Thanks for joining us. First of all, though, the disclaimer explaining that this material is intended for a global audience. It may not be suitable, however, for all viewers and attendees. To find out more and whether that is indeed suitable for you, go to admiralmarketsglobal.com and get more information by selecting your country of residence and contacting an appropriate entity. Trading for exchange and global financial markets is also considered high risk. This is a risk disclaimer explaining that trading for you may lose all or some of your initial deposited money. So please be aware that the risks involved are yours to take. The webinar is not advice, and the webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with the disclaimer mentioned here, and if anything is unclear, please seek the advice of an independent financial advisor for more information on the statement right here, or the disclaimer. And of course, regarding trading. So thank you for your attention. Waves and fibs, well obviously the name says it already. Fibs entails using Fibonacci, retracements of Fibonacci targets. And we also, of course, will be looking at waves. Waves means basically looking at impulses and corrections. Wave analysis is, in a way, nothing less or nothing more than looking at of whether there's momentum or correction, whether the next swing and the swing after that is going to be and wave webinars that do believe that wave analysis is looked upon if one takes it a bit less, let's say, I want to say less serious. It's not that it's not a serious topic, but you know, if a trader tries to be so precise to get every swing high exactly to the penny, you know, what kind of character that will be, it's almost defeats the purpose, because I think it's more a tool that gives a trader an idea of what kind of structure the market could be and an extra edge whether the next swing is going to be impulsive or correction or corrective. And you know, being overly precise I don't think actually really helps. I think it's better just to use it as an extra confidence tool and not try to, you know, use it till the very last penny in a way. Especially if you take it a lot easier in your approach, I think it actually becomes easier because there's less pressure on it. I think it also then becomes clear that basically what we're looking at is momentum and correction, and we're just trying to predict which one it is. Whether we label it 1, 2, 3, 4, 5 or ABC, and at the end of the story, it's all whether price is moving in momentum or corrective. And those labels are just ways for us to help identify that. So does that make sense to everyone? I don't know. Is there anyone new in here by any chance? Anyone not be in a wave and fib analysis webinar before? And does that make sense regarding what I just said? Right? Because when we look at charts, momentum and correction is what defines the market, right? It's all about how price moves. Price makes a lot of chart patterns. What are chart patterns? They're basically various patterns, various sequences of impulse correction. What are candlestick patterns? They're often indicating when the momentum and correction are finishing, right? All kind of patterns, basically, Fibonacci patterns, they give us a certain edge. And the wave pattern, I think, too, is just that we shouldn't make it too complicated. All right, so let's take a look at live examples. Don't forget to look at Admiral Markets and social media. And before I start, seriously take a look at Admiral Markets as your choice for a broker. I cannot specify any names, but yesterday I had someone writing me an email stating that during and after FOMC, the spreads, sorry, the price of the euro dollar on Admiral Markets was about 15 pips less than another well-known broker. I'm not going to specify names. I can't. So, seriously think about emerging markets. So, let's talk about FOMC yesterday. I was bullish for the dollar because we have quantitative easing ending in October. For those that are keeping an eye on basically, let's say, the fundamentals, the phrase that the Fed was referring to, like in a considerable time, was not removed, which means that the interest rate is not probably going to go up anytime soon. It all depends on the data that's going to be released in the next 6 months, and so the market probably does expect it mid next year. Whether that will happen remains to be seen. What is going to happen is that quantitative easing is out of the window and is completed next month. So yeah, that's a dollar, less dollars, right? Quantitative easing is basically creating more dollars. So if that stops, then we'll have less dollars, which is good because there'll be the same amount of dollars floating around for maybe a bigger economy, which means more demand for the dollars. So when there's more demand, potential of inflation and stuff, etc. So dollar positive, at least that's how the price interpreted, because price went up. Today we have some big news, or we have actually maybe tomorrow morning big news, but today is the voting on the Scottish independence, and tomorrow morning probably somewhere the results will be known. We have retail sales an hour 40, building permits, Fed Chairman Yellen speaking again, and then tomorrow the results of the Scottish independence vote. What I've read about it, at least, is that some analysts think that the market is already pricing in a potential no vote more than a yes vote, but according to polls, it's really going to be close. So let's see. Going to be interesting to see what Scotland votes. We can look at the daily wave analysis for 18 September. And we can take a look at the waves together. Let's see, I got Bob, first time in the wave analysis. Good to have you. Good to have you here then, Bob. And Savage by the CAD Yen. Not sure what Savage actually means. Sorry for that. I think it's negative, but I'm not sure actually. If you're in a good pound trade, do you do anything before the news or just let it run? Pound trade, a good question. Any discretionary trading, I'm out. Anything more automatic, I'll probably just let it go because it's just more automated. It's just, but discretionary, definitely I'm not going to be in any trade. Surely not. Euro dollar 4-hour chart, you can see, let's zoom in here. And because we know that the euro dollar is in a downtrend, we're going to label all these down moves numbers and corrections letters, right? But it really doesn't matter. All we need to know is that it's a downtrend and price is moving faster down than when it goes sideways or up, and therefore the chances of having momentum to the downside are higher. Therefore, trying to capitalize on shorts has its advantages, as we can see when looking at this chart. When you look at this chart, what does your eye see? Does your eye see bouncing spots here, or does your eye catch and see the big falls? If you see big falls, you're a trend trader. If you see the bounces here to the upside, you're a reversal trader. That's a very quick test to see what kind of trader you are. I don't see much potential to upside in this downside. When I see such a big fall, my thoughts automatically think about all the pips I can make to the downside. Right? However, I did take a long within this correction and made 60 pips. But it's against my nature a bit, to be honest, because I like trading it with this flow. So when you do wave analysis, of course it's good and nice to have the numbers and the letters matching up and according to the rules, and it's nice if what the analysis says indeed happens. Although I also make some adjustments, obviously, as price moves along further because it gets extended. I didn't expect orange wave 3, for instance, to be still in play. I thought that would have already ended. to be honest. But as you see momentum taking up pace and speeding up, I'm going to adjust that to make it more to adjust my analysis to that, right? Because I see that price is extending. You don't always assume that price will be extending so far, although it's always possible. So then I adjust it, but it doesn't really matter, of course, because it's the same analysis. It's just a bit even further bearish than expected. That's all. So that's why I have orange 3 still open, because this is such a big fall. And as I said, it really doesn't matter if one is here or one is here. I mean, there are certain rules, of course, to wave analysis, but all in all, it's about catching the impulse to the downside in this case. If you have that already in mind, if you already know that, you don't even have to do the wave analysis yourself. You can just, well, unless, I mean, at least not for the euro dollar, pound dollar, dollar yen, because you can go to Admiral Markets and look at my analysis, and you can see what is the momentum direction most likely. That's all you need to know, basically, right? And you already have a certain advantage by using wave analysis. So that's already great. So you can see now looking for wave 5 of 3 to complete. So that's where we're looking for. So we can take a look. This was done a few hours ago. We can take a look now at the hourly, and you can see that I expected personally this to be a bear flag, to be this wave 4 that doesn't really exceed the 38.2 max the 50 all too much. That indeed happened. Of course, whatever happened with the FOMC was beneficial for this analysis. I understand that, but still, what happened. This is what I expected. Although you see here even time analysis indicating that roughly at this 161.8 or 100, anywhere between here basically and here, right? The wave could have ended. Was at the very end of it. In fact, could have gone further. I'm not saying, but the end of the normal range. And you can see here 1, 2, 3, 4, 5 with a 5 wave in 5 and a WXY correction because it's going quite flat. And now we're getting the 5th wave. Is that wave 3? 555 of 3 over? That's the question. So let's take a look at the euro dollar now in live actual charts. In the meantime, I see that actually that was the cat savage is a negative thing indeed, unfortunately for Bob. That's a pity. Let's see. Yeah, no, I know Bob. I know that you've been here definitely before, for sure. And appreciate everyone who joins us regularly. And well, if we look at this fall, it was very fast. It was a very good fall. The question is this fall right in here? 1 second, folks. I'll just be back in a second. There's the phone in the background. Okay, it stopped. So is this fall right in here? A wave 1, 2, 3, 4, 5? I believe so. However, it's always not necessarily a rocket science. It's always a bit of a question mark whether that's true. But in that case, 38.2 fib right in here would probably be the most likely turning spot, and we get some kind of correction like this. But because we are on a wave 5 of 5 of 5 of 3, when you get to such extents, you're always vulnerable to maybe a bigger correction at one point in time. So personally, I think the best trade in this downside is not the 38.2 fib, but was after FOMC when we got this big candle pushing through the trend line, when we had actually price moving up pretty good. This 15-minute candle, I think, was actually the best. That's where I sold it personally, right on that 15-minute candle after the news event and after the break, and we got a good about 80 pips down. All right, I think that personally was the best trade. This 38.2 fib could also be okay, could work. But I'm not going to. It's probably not going to sell it right away there. I want to see preferably an hourly candle, at least showing some kind of shooting star or some kind of rejection before taking that trade. So that's my 2 cents on the euro. This could be the end of wave 5 of 5 of 5 of 3, or it could be a 1, 2, 3, 4, 5. Still a 5-wave pattern within the wave 5 of 5 of 5, and you get something like this, for instance. What would be the target if that does happen? I would say 127.90 here, probably maybe even 127.44, because what's at 127.44? That is the monthly bottom here. So price could fall there and get a bounce off of that weekly and monthly bottom right in here. All right, so let's see. Pound dollar is a bit more, well, it's a bit more, let's say, difficult because of the event here, of that event, the referendum. It too is looking like a bear flag. It just hasn't broken like the euro dollar. It too is in a downtrend. Let's take a look at the wave analysis first of all. Let's see, we're going to take a look at the dollar yen actually after the pound, and then we'll take a look at the Aussie indeed. Let's see, pound dollar right in here. This was a wave 505 ending. So when this formation happened, I've seen this formation already with the pound more often, by the way, when it's kind of like, this is, for those that remember, I was already saying this is looking like a turnaround. That structure is something the pound does more often. Anyhow, that was probably wave 1 and 2. Then we got some good extensions to the downside. Considering the fact that this had such a big momentum, when you get such a big momentum, often enough, that is the wave 3. Because the wave 3 should be the most powerful according to the wave analysis rules. So because that is the most powerful, why is it the most powerful? We can look at the awesome oscillator. That's another reason, another advantage of using the awesome oscillator, because it's so useful in wave analysis. You can see, look at the power in that move, big downside compared to the awesome oscillator that wasn't even coming close to the previous waves, which tells me that that's probably the wave 3. So I put magenta wave 3 there, although it's the 5th wave, I think, of a wave 3. It would complete the wave 3. Now we're getting the magenta 4. That makes sense because price has gone back to the 0 line. Sorry, the awesome oscillator has gone back to the 0 line. Question is, where can wave 4 end? So if you put a fib, wave 4 versus 3, you can see price stopped at the 23.6 fib, but it could go all the way to the 38.2 fib, which is also the top of this trend line, and then find renewed downside. That's what I'm expecting. So if we then zoom into the hourly chart, you see that the wave 4 consists of corrections. So that's why when we reach the top of the flag here and we make this correction, it's very likely that price will retrace back because it's quite choppy. It's a wave 4 probably. So, you know, that's something you can take account if you know if there's momentum or correction. If you always just keep in mind what the structure is, you can use wave analysis. You can use loosely the numbers and letters. Of course, obviously, depending on how interested you are in the topic. If you find it fascinating, go ahead and do exactly what I'm doing here. If you're not so fond of it, then just use it loosely and try to focus on the momentum and correction side of things and try to benefit like that. And you know that the pound dollar, for instance, this wave 4 is probably going to be highly corrective. And unless it breaks the support, it will probably stay corrective. Or at least it breaks, or if it breaks the 38.2 fib, then something else is going to happen, of course, and it could fly up. Bob is saying, for instance, if a note vote could be recorded, it could, he read that it could fly up by 500 pips, and these things could happen. It could fly down maybe 800 pips if a yes vote is recorded. So that news event is very volatile, or could be potentially very volatile. So we have to see. The analysis people make is always, regarding opinions of what price could do based on the news event is always difficult. I read also that a no vote has been already more priced in than a yes vote, so maybe if no, it will not move up as much as it moves down if yes. But really, which one is true? Which one of these two is true? We don't really know. We'll have to see how the market responds when it gets the news. From a wave point of view, I don't see much upside potential, but obviously a news event like this could alter the structure. For me, important level is the top here and the 38.2 fib. If those break, then something else is going on than what I have here in my analysis. Up to 164.50 is something that I could see would fit within a wave 4, maybe even a 50 fib. I don't know exactly where that is at very max. So back to the pound dollar. And that's about it. I guess it really doesn't make much more sense to discuss it. Because, yeah, there's so much writing on that referendum. And anyhow, in my opinion, it's all about the bearish structure in wave 4 and whether price respects those lines. Dollar yen. Let's take a look. Let's see. Darshan, good to see you, is looking for, thinking about a dollar yen short. Is it ready to short? That's the actual question. So let's take a look. We got a very, very big extension here now going on the dollar yen. Even though it's a wave 3, which therefore makes sense. Basically, you see on all the dollar pairs a wave 3 in play at the moment, as far as I'm concerned, the dollar yen, pound dollar, and euro dollar. And within the wave 3, dark blue, we had many subsequent smaller waves, like a 1, 2, 3, 4, and now a 5 extension. Now this, by the way, could be different. Others could have, I don't know, could have it like a 1, 2, 1, 2, and just turn. Maybe I'll even do that. Maybe I'll change that, right? Because it could maybe fit better, right? The thing is that there are various ways of making analysis, even on impulses, and sometimes there are multiple ways that are good to go, right? Are correct. So I don't think it, as I said, makes too much sense to go into very, very detail and work out, you know, all the options and then choose the best one. I think that's a bit too time-consuming for most traders. Just a rough guide of, you know, 1, 2, 3, 4, 5, extension of 5 over 3. Because why is this a wave 3? Probably because if you look at the daily chart, it'll probably have a very strong oscillator vote. So now getting totally confused. Very strong oscillator bars. So I don't think it much for the most traders it doesn't make sense unless you put two wave analysts together in one room and you want to see an interesting debate. If you like it, then that's a different story. But for practical purposes, I don't think it really makes much sense. As long as you stick to the rules and realize it's a bullish impulse, the exact count, I think, is, in my humble opinion, is less important. Here we have the dollar yen 1 hour chart. You can see the break of the wave 4. Wave 4 went only to the 23.6 fib, and now we're extending to targets. All right, so let's take a look. Where could those targets end? The thing is, it's a bit difficult to tell. We got a 50-minute chart that's very, very strong with this impulse. Personally, if I look at that, the AO didn't even get back to the 0 line. So I don't think it's ready for shorts as yet, in my opinion. If you look at the fact that the H3 just got broken, massive Camarilla differences here, massive AO reading on the 15, 1 hour, 4 hour, daily chart. Look at this. This is why it's a wave 3, because look at the daily AO growing and growing and growing. This is pushing. This is not an ABC correction. This is a 1, 2, boom, wave 3, right? Because it's getting that acceleration. So when you look at this 4 hour and the hourly, you see that this is a very strong momentum. And although it has traveled a lot, I was in the long from here, then decided to close it for a few pips, unfortunately, because I thought it could go deeper. Well, I was wrong on that. Should have stayed with the long and would have had been up nice on pips. But that sometimes happens. That's part of trading too. That's part of trading psychology. Didn't manage to stay in this zone, but then got the breakout. Didn't manage to re-enter though, unfortunately, and missed those pips. Well, what can you do? But ironically enough, despite the fact that it moved up so much, It doesn't seem, when I look at these charts, it doesn't seem likely that it's finished as yet. We do have all kind of fib targets, but if price action is not stopping at these fib targets, it could keep continuing higher. The H3 is here, the H4 is 109. Maybe the H5. Let's take a look at the pivot points. So we have a weekly R2, 109. But you know, it's difficult to tell because it's so bullish. I would need to see some kind of even a 4-hour. I think it's almost even it's too risky. I wouldn't be looking for shorts at the moment, at least, unless it maybe reaches the H5 or the 110 level, maybe even. That could be different. Maybe the daily R3 at 110, or even the weekly R3. For the moment, I don't see anything that makes me interested as yet. Okay, we have bullish engulfing hourly at the daily R1. I can see that, but I think it's too little for this uptrend. For me, that's not enough confidence. So I would be cautious. Is it tradable to the upside? That's the question maybe that's also good to ask. And that's difficult too, but we are at H3. So this could be a bouncing spot, and you see price already bouncing off on a 50-minute chart off of that level. But it's not easy with such a big momentum. But that could be doable. With the stop loss, I think putting below L3 is quite spacious, or below L4, but it's probably the safest. The other option would be to put it here below this level. So the H3 price broke out of it, now looking back and looking like it's bouncing off of that same level. Let's see. It's not an easy one to trade because of the big stop loss. So can you tell me the moving average properties? Yes, that they are 21 EMA high, low, and close, and an 89 EMA close. And if anyone wants that indicator, it's no problem. Just send me an email and tell me that you want this indicator in the topic or subject or in the body of the email, and I'll send it to you. Audio USD, in my opinion, it's following the dollar weakness here, and it's doing that very strongly as well. I don't have any wave analysis on the Wedmore Markets website, but here we're getting the breakout of this zone, of this triangle, as we know, right in here. And that's basically looking for the breakout and continuation for more downside. So we had some bounce here to about a 23.6 fib, okay. Thought it was 38.2, but okay. Right there. Engulfing daily twins yesterday after the FOMC. So we had a very strong breakout and engulfing twins. So it looks like it could fall further and eventually fall down to the support, I would say. Let's see. It's always possible to get, of course, some ups and downs within a day. So that depends. I think that a break of this bottom seems pretty good chance. Because there's no divergence as yet on this hourly either. So looks more bearish to me than a potential bouncing spot at the moment. Looking at the 15, it's already, it's approaching the L3. So if it makes one more fractal at the L3 or even breaks, actually, this could be already the breakout. It's actually right in here. I would consider maybe a breakout. But the problem is that we're still above the L3. So preferably, I would like to see this fractal at this fractal, but it's a bit off of it. As you can see, there's a bit of a difference there. There's a bit of a gap between the blue and the red. Preferably, I like the fractal to be closer to L3 and wait for the break of the fractal and L3 for downside. Resistance at 89.75. Yeah, if it gets back there, that would be nice. This is top indeed. If it does make that push up, I think it would be a good discount indeed. Otherwise, it looks pretty bearish. Just a question, I would say, of when and where to try to attempt a short. Darshan went sold yesterday, and I think that made sense because look, this is when we look at the moving average strategy, right? Look for strong AO, look for price to be away from the 21 band, then go back to the 20 band and close below it. Remember? So this is an example of a candle that qualifies. So shorting at that level or even higher, Darshan, is I think a good thing for short, and that trade is doing very well. So that was a good short, right? Hourly, about the same spot. Good downside. So what we're catching is a 50-minute. Here is a 50-minute, kind of like a last wave, to be honest, because this is more looking like was difficult. This is too much ups and down, but basically here we started with the breakout to the downside, and this is maybe one more downside impulse, and we could see maybe some correction again. All right. 1 second, folks. The telephone is unfortunately going. 1 second. Alrighty, I'm back. Okay, so let's see. This is the, sorry about that. But doesn't mean that this breakout doesn't have, even though it's a follow through of a breakout on the 4 on hourly, it doesn't mean that 15 could not have a decent momentum. Regarding that strategy of yesterday, setting aside the fibs and waves just for a second, as I said, I didn't take the trade, but I wish I did in a way, because not to say that, of course, it's always a pity, but why I still want to refer to it is just to show you that using moving averages can be very beneficial. In this case, I said normally speaking, if pound wouldn't have news, this is a breakout of the pound yen. I said there was one trade, the pound yen and pound out breakouts that looked good yesterday. Remember, that was at this red line, and once again, it's not about the fact that I didn't take it because I said I wouldn't. But it's about the fact that just to show you an example how the strategy can help with your trading and be part of your trading maybe, is the fact that this was such a good breakout. Look at this from 174.60. The theory flew up 300 pips. Was a bullish moving averages at the L3 at the time, so or H3, sorry. So once again, it's not to say like, oh, you should have gotten those pips, but I just want to show you an example how you can use that analysis to catch part of these moves like this on the pound yen, for instance, and also the same story in the pound odd. We were talking about the pound odd too, right in here somewhere, forward and upside. Look at that, it's still moving up as we speak, in fact. So, in that regard, very happy with the analysis, at least, of course, right? So alrighty, moving on, let's take a look at Kiwi is also moving down. Dollar CAD also could be in a breakout scenario, because if you look at the bigger time frames here, what happened? We had an upside, a retrace, a three-way retrace, look, upside break, a three-way retrace to the 50 fib, and then a bounce up to the minus 272 target. This looks like a pullback for a move up to the minus 618 target. Now, with the dollar CAD, for instance, I don't look exactly at the wave analysis. I do more of momentum correction analysis and look at trends and trend channels. I don't have an exact wave count for the dollar CAD. Dollar CAD, anyhow, is a pretty tricky wave count to do, right? So I know it by heart for euro dollar, pound dollar, dollar yen. The rest, I don't have a specific wave count. Maybe sometimes I look at it for my own interest, and I just use it at occasions in my back of my mind when the need for it arises. Otherwise, I use just the tools with regard to fibs, trend lines, moving averages, candlestick patterns, chart patterns, momentum correction, in more primary focus than necessarily an exact wave count on these. All right. So that's why I won't discuss any exact wave counts besides on the major three. Regarding fibs, though, obviously you can use the AO to use the fibs, for instance, and fibbing it from retracement to target. That's another method. So the pound odd is looking again pretty good. This was a nice dip back, which was a good longing spot potentially here on the pound odd. The euro odd is in the breakout mode actually right as we speak. Moving averages are a bit iffy though. Pound yen 2 is back to the H3, could be a bouncing spot yet again in this tremendous upside. The euro yen has already actually gone a bit past all of its momentum of the day. It's getting closer to the H5, so I would be cautious with the euro yen. Dollar Swiss C to a big upside. Kiwi is breaking just like the Aussie, but it too is pretty far from the L3. You want to be careful with the breakouts like the H3 and L3. You know, when you have, for instance, price moving down like that, but price being above the moving averages and then breaking below it again, it could be a good breakout, but sometimes you just get a continuation of the choppiness. What I'd rather see is price then move down like that, hit the L3, move up a bit, and then break. It's a bit more safer in its stats, I think. Let's take a look at gold. Yesterday down day. How about silver? Yesterday down, but it's getting very close to the 1840 bottom. That's a crucial level, of course, as it gets close to, or 1820, sorry. 1820 bottom. So time will tell if we can push through that. Dollar index is pushing, or right at, / pushing through the resistance as we speak. Oddcat had a very good downside yesterday here. This break, but still between the H3 and L3. You'll see that the Camarilla levels are pretty big today because of the massive movement yesterday that we saw with the FOMC. Euro New Zealand bounced nicely off the weekly and monthly pivot points already. So maybe the best is to take one pair, and we just scanned the market quickly together. Maybe the best is to take one pair and do some waves and fib analysis together, because otherwise I'll be probably scanning the charts too quickly here. I think it's probably better to pick a pair and take a look at it. And we can do the waves from scratch, but not the dollar yen, euro dollar, pound dollar, because that's something we did the first 30 minutes. So if you missed that, we're not going to do those again because we can take a quick look, but I'd rather do something else. Is there anyone who has a pair in mind? Maybe we can do I don't like that one. It's too volatile. New Zealand cat. I don't think I have New Zealand cat, or do I? Nope, I don't have it. Well, let's do, maybe we can do, I think the pound yen, okay. I wanted to avoid those because actually we're in such a big up momentum that the problem is that, or not the problem, but there's probably little chance we could actually capitalize on it, but we can try it. I don't use any software for wave analysis. It's just the my own eye, basically. So I don't use any software to help me identify the waves or something like that. So pound yen monthly chart. You know, this is, I don't like wave analysis, to be honest, on a monthly chart most of the time because the currencies, they most of the time just bounce back and forth. And it's has less value. I mean, who knows what happened here? Okay, you know, the last before 1991. So what does this mean in a bigger context? It's difficult to say. I think this analysis has little value for us, you know, traders from a practical day-to-day point of view. You know, I don't think we could label, for instance, this as an A, and this maybe as an ABC for B, and then this down for C, right here, for instance, and then consider this to be wave 1 potentially, and eventually we'll go down for wave 2. But I really don't see a practical benefit of doing that at all. I think I do it though for I do have monthly charts on the euro dollar, pound dollar, and dollar yen though, by the way. Those monthly charts actually have a bit more structure to it, so it makes they actually have a certain advantage to look at the monthly charts with wave analysis. This pound yen is just going sideways. Basically, the high is 250, the low is 115. So it's more difficult to read. The weekly chart, we can see though on the monthly chart that obviously that there was a strong momentum down, but we had divergence between these bottoms. And after making, for a chart pattern view, after kind of making a falling wedge, we broke out of the falling wedge and traveled about 6,000 pips to the upside in the meantime. So when we look at this analysis, this wave up, we don't know what this wave up will be part of, whether it will be part of an ABC or if this is a 1, 2, 3, 4, 5. Sooner or later, this is going to, you know, have its kind of like its final push up, and then before it starts to retrace a bit. But the question is when. This is probably the first wave, the second wave. Looking at the oscillator here, you can see wave 1, wave 2. And the funny thing is, this oscillator here has not returned to the zero line until here. So this is probably a wave 3. So this is probably a wave 4, and this is a wave 2. So we're probably in a 1, 2, 3, 4, 5 now. So if we then put a fib on this, we didn't get really to the normal fib. It would be 23.6 would be normal. We didn't get there. But if we still use that fib, then we can see that maybe 190 is the minus 272 target. Maybe. It's difficult. I mean, it's just an approximation, of course. So this looks like a wave 5 on a weekly chart. And that's the same, basically, for the dollar yen, too, at the moment. So on the daily chart, we see that this is probably some kind of correction for that wave 4, which is probably some WXY, a lot of corrective sideways move. And this is probably part of the wave 5. So we then zoom into the 4-hour chart and the hourly. This is all probably part of wave 5, and that could last pretty long. This looks like a wave 1 2, and if this is a wave 3 indeed, it should travel a lot further than wave 1, which is wave 1 was about 530 pips. So if we add 530 pips to this bottom, it's 178.30. So we have still a decent while to travel if this is a wave 3 indeed. This can go up another 200 pips, 130 / more, if this is indeed a wave 1, 2, 3. The other alternative is that this is a wave 1, 2, wave 1, wave 2, and then you get the third. That could happen too. So crucial bottom is probably this bottom. This top is probably also going to be important. So if it doesn't continue immediately, then this probably would be the bouncing spot, which is also the broken resistance here, basically, and a daily fractal. And that's something we'll never know until price really either, pushes. We don't know if this is going to be a wave 1 of 3 or if this is the wave 3 unless price really starts to accelerate. The same with the euro dollar. I remember that we were about here and it could still have been an ABC. Crucial was the break of this level. If it did, that means it was accelerating to the downside. I remember very precisely. And basically, that point, this could still have been an ABC, but the break of that meant the acceleration of price. So that's what we have to see here too. So, how can you capitalize on trading the waves? Obviously, you want to try to position yourself for the wave 3 of wave 1. You can even take, if you're lucky enough, you can even catch the very reversal, wave 1 of 1, but that's a reversal trade because you don't know, you're still in the downtrend. Wave 3 of 1 is the first time you can have a hint of a potential upside, right? Uptrend. And preferably, obviously, the wave 1 of 3 too, the wave 3 of 3, the wave 5 of 3, etc. So certain spots, you don't want to position yourself at every single spot, right? Because at certain levels, at certain moments, the likelihood of price making a continuation or turnaround is not so much in our advantage. We don't have a distinct advantage at certain spots. At other spots, we have better likelihoods, right? So, for instance, if price makes a wave, finishes at wave 1 and makes a 3-wave correction for wave 2, taking a trade in here is distinctly better than, for instance, the wave 5 of 5 of 5. So this analysis doesn't necessarily, at the moment, allow us to take a long right in here, in my opinion. Unless you have a specific strategy, not based on wave analysis or fibs, in my opinion. Unless we zoom maybe even lower to 50-minute chart, but I don't like using wave analysis that low. Or I don't know if I don't like it, I just don't have a habit of doing that. So that's it. Is this the wave 3 or is this the wave 3 of 5 or wave 1 of 3 of 5? Now, considering the fact that this wave 3 lasted very long, even this wave 1 lasted 12 days. This wave 5 just started. Realize that, probably. So it has some spunk left to the upside. It's just that how much of an impulse would you get here? And I don't see, within this wave, up wave, I don't see any structure that would help me guide, help me with taking some trade in here. This could be maybe a 1, 2, and this is a 3, which means we can still see some wave 4, 5. We could therefore put a fib from here to here, for instance. But then still, I would like to see price back at the 38.2 fib. That's probably the only thing that I can see that would be interesting, is trading the wave 4 off of this 38.2 fib. But I would really like to see price action confirm that bounce, because otherwise, if it is not a wave 4 right in here, it could turn out to be the wave 1, 2, and we can see this. Yeah, there are guidelines indeed. Besides rules, guidelines, one of the guidelines is what Bjorn says is the retrace of wave 1 is indeed usually very deep. The retracement of wave 4 is usually very shallow. It has everything to do with the psychology of the market, because when you have a wave 1, basically you're either still probably in a trend to the opposite side at that point, but the market, well, let me make it a bit more proportionate. Trend, a wave 1, and then you see often this, because that downside momentum is still so prevalent indeed. And then you get the wave 3, and you can see that the wave 2 and the wave 3, 4, 5 at the very end here cause that head and shoulders potential there. So you can see that they go hand in hand together, waves, fibs, chart patterns, these other patterns based on fibs, I forgot their name, harmonic patterns. Everything is a pattern basically. They all kind of are interconnected, influence each other, impact each other, etc. All right, so other guidelines, usually wave 4 is big in time size as well, by the way, besides shallow. Is usually complex. Wave 2 is often a zigzag, which means an ABC, which means momentum, which means more interesting to trade because it's momentum. Wave 4, because it's a consolidation, is very corrective and very choppy, very difficult to trade. Wave 5, because often it's the last leg, is also not as great, unless it's a wave 5 of 3, because then of course it still could be very lucrative. But when you start having divergence, you're often getting into multiples of wave 5s, and they don't go typically that far. And there are many more guidelines as well. So if we look now at our Kimberla and try to see how we can use that to our benefit. Now we've done the wave analysis, in my opinion. Let's take a look. So we know that this could be a wave 3 of 3. Sorry, this could be a wave 3 potentially, or for instance a wave 3. So if we put a fib from here to here, the 38.2 fib is above the L3. So okay, that doesn't really give us does not really give us much information here. The 38.2 fib is at the weekly R1, okay. Sometimes you get some extra confidence, not too much there. If this is a wave 3 still in its how do you say it, in its structure, then this could be a good bouncing spot at the H3, because the H3 would be probably a level where we would have a good chance of the wave 3 continuing, because we wouldn't expect a mega deep pullback. So then this would be a good bouncing spot. Well, we have retail sales, of course, don't forget, in 50 minutes. I think it is on the pound, if I remember correctly. So you want to be careful of that. Let's see. No. Any other questions, maybe? Or any other pair you have in mind? But with the knowledge that this is a wave, a follow-through on wave 3, or a follow-through of 1 of 3, and on the higher time a break of potential wave 5, it just supports the fact that this could still be a bouncing spot as an extension of that. Might be worth a long at H3 under certain circumstances, maybe not now because of the news event, depending on how you tackle news events yourself. But you can see that any dips back to the 21 band that we've seen on the 50-minute chart have caused this pair to move higher and higher. So often that is typical. If you see a strong move up, the 21 band would contain it like this, which is pretty cool to see. A 21 EMA that is relatively close to price contain price so nicely on a 50-minute chart. That only happens, of course, when there's a strong momentum going on. Because if there's not a strong momentum like this, the 21, I mean, the price is going to be all over the place compared to moving averages, right? If there's a correction going on, let me think. The euro dollar, for instance, man, oh boy, was that? I mean, that was all over the place, right? Let's take a look before it broke here. Here, look at this correction. Look at the moving average. Look at price and moving averages. How neat, price is reacting to the moving averages when it's trending in momentum. Look how sloppy it is, basically, when it's correcting like this. Now you might get discouraged of using moving averages when you see this, but realize it's actually a benefit for yourself, because when you see this, you instantly know this is a correction. The moving averages reveal and communicate that information to us. So what does that mean? That means I'm not interested, basically, if I'm using moving averages, if I see this. So I might as well almost take them off and use a different template, because I know it's choppy. And if you then take them off, you would see the bear flag maybe, or maybe even with them. So back to the pound yen. So yeah, so if you have a momentum, price could be very well contained with those moving averages. Yes, the webinar is recorded indeed, and you'll be able to find it through YouTube and Vimeo. Give it a few days, I think, probably before it's there. The euro odd, for instance, just to randomly pick a pair so that we don't lose too much time on choosing. We don't see much information. All we see is a consolidation here, like this. We see a spike out of it and a massive downside, and who knows what this is? We don't see anything before 2003. So that's the thing with wave analysis on such a high time frames. We don't really have enough information, in fact. What we can, of course, realize is there's momentum down, but we have momentum up now. And if we look at the momentum up, I think that's the most important at the moment. We see either a 5-wave completed like this, possible, but it wouldn't really fit the AO, because this is one leg according to the AO. This is one leg. This is one leg. And then this is a leg. And then this is a leg, if you look at the AO at least. So how does that piece together? Well, it's actually, if you look at the AO, it's actually more of a corrective structure. Although, if you look at it from this point of view, one could see a 5-wave in it. True. But if I use my AO rules, then it doesn't look impulsive. Then it actually more looks like a ABC correction. But although the problem is that the C is just so far off of A, or further than A. So this is, sometimes you really don't have an answer either. I don't want to say there's always an explanation for everything. But the best is not to get too annoyed by it and just forget it and move on, because I don't think I wouldn't advise to treat it as something of an exact science. So in my opinion, it's more corrective which therefore makes sense that we found some rejection here. In any case, there was divergence between these two daily tops. So what, we will have to, we can put, for instance, if this is a 5-wave structure, we can put a fib from top to bottom and find out where the support levels are. And one of them is the 38.2 fib, the other is the 50 fib. We are bouncing and using these fibs. That too is a clue that maybe that is a 5-wave. At least the price is respecting those fibs. Any of these fibs, if this is a wave 5 wave for wave 1, then wave 2 could be any of these fibs. It depends if this is done a wave 1, 2, or is this a wave A, B. And this is something we really don't know. Some things are not solved. Some mysteries will take longer to be revealed. In any case, you can see here how the fibs work. If you put a fib on this momentum up here, we went to the minus 272 target. So we then zoom into the daily chart. We can start analyzing this move down. Now that we know that this upside completed something, we don't know exactly what though, unfortunately, but it completed something. So let's take a look at the downside now. What does this downside have in store for us? Well, we see wave 1 or A here, followed by wave 2 or B, and this is looking like a wave 3. Is this a wave 4 right here, question mark? It could be, because it didn't venture into the territory of wave 1, although it's very, very close to it. Right? So it could be 1, 2, 3, 4, and we're getting an extension of wave 5, which may be completed with 5 waves, which means from this point of view, we could put even a fib on this entire downside too. And any of these fibs could be back, retracement fibs, for more downside, ironically. That downside would mean that this is probably a wave 1 or A, wave 2 or B, and we get a wave 3 or C like that. That could happen if this is a 5-wave up, or even if this is an ABC up. Something like that could happen if you look at the daily chart. You can even look at a 1-hour chart and go back to the very top of the first move up here. Wow, it was a very long time ago. That should be it right here. And the advantage of looking at even a lower time frame is trying to decipher and understand if on the lower time frame there were structures of impulse when moving down. Did we have that? And sometimes it's difficult to be very precise, but does it look impulsive on this chart? Let's take a look. What I'm looking at is the potential of a wave 1, 2, wave 1, 2, wave 1, 2, and then all of a sudden a wave 3. That's what I'm kind of looking for. This goes right a bit into that zone. Here even more. Got a pretty big consolidation here coming up. So let me take a look now at the 4-hour quickly. On the 4-hour, let's see, this is pretty corrective here. This does not look like a wave 1, 2. This does not look like very much like a wave 3 to me. But it did have a strong AO. Technically, it could look like a wave 5 wave like that. But this wave 3 is not as smooth as typically we'd want to have it. So that looks more corrective, in fact. Yeah, it looks more corrective to me. Still, it doesn't matter though. Even though this is corrective, it could still be part of a bigger correction like that. So, to be honest, sometimes the wave analysis just will not give much of a confidence, will not give much of a, in my opinion, much extra value at times. It's not always so that it will give me a certain extra nudge. It is true though that when I do the daily analysis on euro, dollar, pound, dollar, yen, because I do it every day, I get into a kind of flow with those pairs with the wave analysis. So I think when done regularly and maybe probably daily preferably, it takes less time and you kind of get into a flow. If you don't do it, then you have to start kind of from scratch and look as we've been doing now, and it's not like you have the finger on the pulse as much. So if you like it, I would recommend probably, instead of doing, depending on how much you like it, probably choosing a pair or two or how many you like and doing it that way, and rather using it intensively maybe on a couple than loosely on a lot. Probably, but because you get more feeling for it. It's kind of like a rhythm which you kind of stay in touch with, or at least that's what I think on that. So that, I guess, wraps it up for today. I think we exhausted this topic nicely. Hope it made sense. If you have anything specific regarding wave analysis or fibs, we'll have one again. I'm not sure about this month, but for sure next month again. Tonight we're going to talk about how fractals can boost your trading. Take a look, very interesting, I think. Next week we don't have it, and let's see, the week after we don't have it. No, not anymore this month, but next month certainly. So join us then, and you can ask some specific questions. If you bump into those when you start, if you start looking into this a bit more intensively, maybe you have some questions, by all means ask them next webinar or any webinar, but specifically this webinar. And good trading. Wish you many green pips, as Stellantala says, and see you tonight when we take a look at fractals. Cheers.